So, please welcome to the last panel of the day and a very important topic, blockchain regulation and the law in 2020. A lot of things are going on these days and also the next few weeks. So, I'll give the word to Dvorah and please go ahead and welcome to the last panel of the day.
Thank you so much, Victoria, for inviting us to this really awesome panel and of course this super awesome conference. Thanks to all the sponsors and of course thanks to you, the attendees, for attending. This is your conference, so please put your questions into the chat and then we'll answer them as we go along. Now, what we're going to be talking about today is regulation of blockchain. Super important for everyone, for all of us together in this blockchain world. Particularly important for those killer blockchain apps that we know are coming, the ones that will be widely used by everybody. I am joined by an awesome, all-star, all-female panel. And I'm going to introduce them to you one by one. They have so many accomplishments. I'm only going to be able to tell you about a few of them. Amandine Doat heads the public policy program at Ledger. Ledger is a scale-up specialized in security, which is essential if you want to keep your private key safe, and has sold more than $2 million worth of Ledger Nanos in the past few years. Ledger also offers B2B solutions for enterprise. Regulation is key at Ledger, as they believe this will drive mass adoption and will also help traditional institutions dive into this fascinating ecosystem. Nina-Luisa Siedler is partner at DWF, a technology-oriented global law firm, and head of the International Blockchain Competence Group. She focuses on the legal implication of blockchain and distributed ledger technologies. Nina is a member of the board of directors of INATBA, an EU Commission-initiated global blockchain association, the Interplanetary Database Association, and a Luxembourg-based legal think tank. She supports numerous initiatives and has recently joined the Dvorah Exploratory Working Group on Digital Assets. Josh Clayman is Senior Counsel, U.S. Head of FinTech and Head of Blockchain and Digital Assets at Linklaters LLP. She is one of the best-known blockchain and cryptocurrency lawyers in the world, recognized by Chambers and Partners as only one of 3 Band 1 ranked U.S. blockchain and cryptocurrency lawyers for 2019 and 2020. At Linklaters, Josh is also a member of the FinTech Steering Group. She chairs the prominent Wall Street Blockchain Alliance's legal working group and serves on its board. By background, Josh is a transactional finance and corporate lawyer. For years, Josh has worked collaboratively with blockchain leaders and key market participants from around the world to advance the industry, anticipate and address regulatory concerns, and seize strategic opportunities. She speaks frequently with regulators both inside and outside the US and was appointed by the state of Delaware to serve on its blockchain strategy committee. For those of you outside the US who may not be aware of this, the state of Delaware is the state in the US in which a huge number of corporations are based. Corporate law in Delaware is perhaps the most advanced of any state. So Josh really has her finger on the pulse of blockchain in the US. Passionate about the advancement of women and other diverse groups, Josh is a co-founder of the nonprofit Diversity in Blockchain. She has 5 children and 1 grandchild, leading some of the blockchain industry to nickname her Mother of Blockchains. Belén Arribas is a senior law professional with an extensive track record in digital, corporate, commercial, and data privacy law and compliance, including cutting-edge sectors like blockchain, AI, IoT, big data, cybersecurity, and more. She pioneered the practice of IT law in Spain and has been recognized in directories like Best Lawyers and Who's Who Legal. Previously at Andersen, she currently owns her own practice. She is vice president of IFCLA and board member of INATEC, the Spanish Association of IT Law Experts, as well as a board member of the Digital Transformation Commission of the Barcelona Bar Association. I would like to welcome all of our panelists and thank them for taking the time to join us today for the panel. We're going to start with country-specific regulation. Amandine, would you please like to start? What are your feelings about country-specific regulation in blockchain?
Thank you very much, Dvorah, for the question. So I would say that my knowledge is more about France than the EU regulation, where I'm located. I would say that first, we can hope for harmonized regime. The French regime has been established, I think it was a year ago. It's a good regime. It's an opt-in regime, meaning that you can launch a custody business in France, for example, being licensed or not. You can decide. So it's really innovative for an innovative word. You will have to go through, for example, if you're an exchange or if you're a custodian wallet, you will have to go through AML procedure, meaning that you show that you have taken into account anti-money laundering and anti-financing terrorism procedures. But then once you've showed this and you're registered within the competent authorities, then you can launch your business. You can go through the full license process, but it really depends on whether you want to do it or not. So I think this regime, which we call an opt-in regime, is really innovative in the financial crypto world, because it's not that common to get opt-in regimes in the financial world. And I think what I like about this regime is that crypto asset world, I think it's big because I work on a daily basis on crypto assets, but it's not that big if you compare it to the financial industry already existing. So the risks are at the size of the market. So it's great to have a legislation which is helping innovation, because you don't have to spend, tremendous resources, for example, in compliance. It's important to protect the investors. It's important that there's no money laundering or that you fight against it. But for the rest, it's important also to have businesses which can scale. And if you have like a regulation, because that's the name of the panel, if you have a regulation which is so heavy that instead of spending your resource in innovating, you spend your resource on compliance, I think it's going to be hard to be attractive, actually, it's going to be hard for companies to scale, and it's going to be hard to attract actually foreign companies. So I think we can, that's a really great system. So as you know, France is part of Europe. I think we'll talk about Europe a little bit later on. Of course, if there is European legislation, French regulation will have to adapt, but that's a different story. As for France, it's set in stone now, and crypto companies can start doing their business knowing where they go.
Excellent. Thank you so much, Amandine. Belén, what are you seeing in Spain? I heard there's some exciting news.
There are exciting news. However, I must start by, unfortunately, not being so optimistic or positive like Amandine, because in Spain, actually, we do not have a legal framework for blockchain businesses. We do have an expectation, which is made reality these days, which is the proposal of EU regulation on crypto assets. I think that one of my co-presenters today will go into detail later. And of course, this proposal represents a lot to our system, since we think that it will bring certainty and legal clarity, and above all, a common European approach, so that players can follow the rules and enter the EU market. So far, we have a lot of uncertainty, at least here, for assets, for securities, for utility tokens. Of course, we need still a proposal to go to the parliament, to be debated and hopefully adopted. But if adopted, we will have a balanced approach, which we need. And I said, it can take some time, but I think it will be a time well spent. What we have in Spain, I will go through very, very quickly. I will go through the hot topics regarding crypto and blockchain businesses at large, and then I'll name a few landmark statements on cryptocurrencies by the Supreme Court and the European Court of Justice and the supervisory authorities in Spain, which makes our framework, our current framework. So the hot topics, as anywhere else, are sovereign identity, governance of networks, tokens markets, digital contracting, smart contracts. If a blockchain is a mean of proof or not in front of court, of course, data protection and privacy issues, especially with public blockchains. If hash is a personal data, etc. We can go into more detail later if we have the time. Now, I was saying we have these very few statements regarding cryptocurrencies. Cryptocurrencies, as most countries, is legal, but is not regulated expressly by our law. We have the European Court of Justice decision in 2015 that declared Bitcoin as a virtual currency whose trade with a traditional currency is VAT exempt. Then we had a landmark court decision in Spain by our Supreme Court that stated or categorized Bitcoin again as an intangible, I'm reading, intangible property asset that does not qualify as money. And then a few clarifications regarding tax aspect were given. So the Supreme Court, as with the decision of the European Court of Justice, stated that the exchange is not subject to VAT. It is to personal income tax as capital gains. It can also, as the case may be, apply or be subject to company tax and to wealth tax. This is some of the certainties we have regarding crypto. Then we have like 20 decisions of the Directorate of the Authority of Tax Directory in Spain, and a few court decisions in cases of crypto theft. This is all regarding cryptocurrencies. The Spanish regulator, CNMV, the Securities Market Commissioner, issued a very important statement on ICOs back in 2018, and we don't have much more than that. It stated that ICOs could be issued until the EU legal framework was published. It stated that it can be issued up to 5 million euros in company shares or securities, that securities could be traded, of course, that security tokens were acceptable as alternative for crowdfunding, especially for startups, etc. That was a recognition then. That, well, it accepted further that utility tokens that were in the market, but both concepts of security and utility tokens were a bit confusing. It stated, for instance, that utility tokens should be regulated or were impacted only by consumer protection law, while security tokens are impacted largely by MLA KYC procedures, by MiFID regulation, prospectus directive, and the whole package as securities.
Okay,
so very
excellent.
Distinctive, very different treatment by the regulator to these two different kind of tokens at a time.
Thank you, Belén. Nina, would you like to comment on the situation in Germany then?
Yeah, sure. We had some major amendments of our banking laws as of the beginning of 2020, when Germany implemented the changes triggered by the European anti-money law regulations. But the German legislator did not only implement these, but took the opportunity to introduce a couple of further things which are Germany specific and not European law based, basically including a definition of crypto assets, making them all financial instruments. So according to German law, cryptocurrencies are financial instruments as well, not only securities. And then the second main point was that they introduced a new licensed service, which is a crypto custody. So that happened earlier this year. And then just a month ago, the German legislator finally published a draft on the new electronic securities law, which will waive the current paper requirement for issuing securities here in Germany and introduce the concept of electronic registers and specifically crypto registers. So that is currently very much debated. Specifically, the proposed law does not seem to include an exemption for issuers. So even the electronic securities issuer will be required to obtain this license if they want to operate their own register for their securities, which was a bit a surprise and is now debated. Other than that, so Germany is not a very crypto servicer friendly environment, because basically any type of service by now requires some sort of license, a true financial services license, with all the stuff coming along with that, minimum capital requirements, reporting obligations, everything, you know, the principle of same risk, same approach applies fully here. Yeah, so that's basically it. And then maybe in addition, typically Europe took a very close look only at things happening on their own territory. But this concept weakens now a bit because approaching at least the German market is now understood by BaFin also to happen when you have a website not expressly excluding that this is targeting Germany, for example, or if you build up a network of recommenders for your products within Germany, then you're assumed to be targeting Germany as well. But you know, Josh, we had this discussion a lot of times. The US goes even very much further that, right?
Yes,
So,
absolutely.
Is it true?
Yes. So yes. So since it's not the North American Blockchain Convention, I'll keep it brief because I know it is the European Blockchain Convention. But yes, in addition to having to worry about, if you're dealing with the US, you know, potentially state laws, potentially federal laws, in some cases you actually have to worry about US law, or at least the US says that you have to, even if you think you're trying to do things outside of the US. So what do I mean by that? Well, in general, the presumption is supposed to be that, and is, that generally speaking, US laws apply to activities, only conduct really within the US, except if there's specific reference, an explicit reference, that there is extraterritorial application, right? But what is conduct within the US? Like, how do we look at that? So a couple of things just at a very high level, and nothing on this panel is legal advice or investment advice, I'll say on behalf of all of us. Basically, if the conduct that a statute is looking to focus on occurred in the US, then it's possible that the case involves a permissible domestic, meaning US, application, even if other conduct occurred outside the US. But if what the focus of the statute, if that conduct occurred outside of the US, then perhaps the US law wouldn't apply. So how can this come up? I'll just give a few quick examples. In the digital asset context, this is by no means exclusive, and again, it's very high level. So the Exchange Act, the Securities Exchange Act of 1934, and its rules and anti-fraud provisions, those can be enforced by private actions, by the SEC and by the DOJ. And in some cases, you know, it could be something that you think is occurring outside of the US, right? Where you have freedom of contract, you've had choice of jurisdiction, you say the making of the contract occurred somewhere else, you have choice of law outside the US. But for example, in the Second Circuit, basically the circuit covering New York and that area, has applied what's called an irrevocable liability test. So when determining whether a securities transaction happened in the US or is domestic, they ask, where did the purchaser incur irrevocable liability to pay for and receive a security? Or by contrast, where did the seller incur irrevocable liability to deliver the security? And so they also may look at where title to the security was passed. Now notice I keep saying security because it's a securities law thing. So I should note, and I think it's important to note here, even though I'm going to just talk about for a second a few other different kinds of laws, is that you can have outside of the US throughout the rest of the world, you can have in its jurisdiction of issuance a token not be deemed a security under those laws, but the US looks really at the transactions, the sales transactions, the offer and sale. And so it could be deemed to be a security in the US, even if outside of the US it's not a security. So definitely a lot to think about. A few other quick things. The Commodities Exchange Act, including its anti-fraud provisions, that can be enforced by private actions, the CFTC and the DOJ, and it has a similar test to that irrevocable liability test, and also a few other cases like swaps where it's more explicit. But then the Money Laundering Control Act and the Foreign Corrupt Practices Act, those permit extraterritorial jurisdiction, and in cases where you might not expect. So I'll wrap it up now, but what I will say is, when you're looking at, for example, in the Foreign Corrupt Practices Act, the anti-bribery provisions, right? When they talk about interstate commerce, meaning US interstate commerce, it can be as simple as placing a telephone call or sending an email, a text message, or fax to or from or through the US, as well as, for example, using the wires. So definitely something to be careful of if you're trying to avoid the US, not just if you're operating in.
Yeah, I'm actually quite shocked by that, Josh, but thanks so much for letting us all know. So this actually brings up another interesting point. We could, of course, develop laws that would allow us to work all over the world with blockchain and would allow issuers to work internationally and work between countries. And we could do it in one of two ways, either through harmonization or extraterritorial regulation. So Amandine, if you could please start us off, what do you think, harmonization versus extraterritorial regulation? Where do you think the trends lie? And what is your personal take on this field?
Right, thank you for the question, Dvorah. I believe the more harmonized we are, the better the company can scale. It's very hard for us, if we take the newbies, in this environment, not a bank which would have done custody of securities for the last decade. If you are a new company and you want to enter the space, if you are a European company, you can decently think that Europe is one region, which is supposed to have one regulation. I mean, we do have laws which are voted at European level, and you can expect these kind of things. The thing is that in Europe, even if you have those kind of directives or regulation, you still have a kind of local interpretation of the law. And this is going to lead to a kind of forum shopping. And this is against, I would say, predictability of where you stand if you want to scale beyond your home country. I mean, Ledger is selling in 165 countries. Ledger is 120 employees. There's no way I can check in 165 countries whether I'm going to be compliant or not. I mean, either I sell in France and then I'm going to remain like a French company, which is okay. But if you want to scale, I mean, how am I going? And I'm part of the legal department. I'm just like, okay, so how am I going to do it? How am I going to say that I need this kind of budget for regulatory compliance where we are just trying, to become a little bit bigger? So it means that I'm strongly in favor of harmonization. I'm strongly in favor of giving the needs, giving the tools to actually scale a little bit broader than your home country. And I think after that, it's a kind of risk-based approach. You cannot, I have to admit as a legal counsel that I have said yes to commercialization of the product where I had the gut feeling that it was okay. But was it okay to have non-hosted wallets sold in this country? I mean, who could tell, and definitely I didn't have, all the means at the time to actually choose that. So I think as my recommendation, if you want to scale a little bit abroad, is that you get a feeling of the countries where actually you can be caught. And what Josh said is true. I mean, in the US, you can be caught. You don't want to be caught in the US. You have the feeling that you don't want to be caught there. You can, because not in the US. It doesn't feel right, in terms of like reputation. You're going to be like on the headline of the newspaper, you got caught in the US. I think for your company, it's going to be hard. But then you have to choose the countries where if you want to have a kind of a proper business, at some point, you will need to make a risk-based approach. The same way that the regulation did a risk-based approach, as Nina said, in Germany. The same risk will lead to the same consequences. I think it's also a risk-based approach when you build your business.
Well, those are really excellent points, Amandine. You're right. Risk-based and balance of risks, Europe. I don't know, it sounds like could be a bit tough environment. Belén, what are your thoughts on that?
We can hear.
Sorry, you're muted. Belén, can you unmute yourself?
I was saying that I couldn't agree more with Amandine. I am a strong believer in harmonization as well. Of course, I'm a European, and I believe we need to develop harmonized understanding of what digital assets are at large. I found a very interesting paper from the EU Blockchain Observatory and Forum, which is the report they just published on their 2 years of work. It's called Conclusion Book, and it does have a lot of insight regarding harmonization and how the legal recognition of blockchain smart contracts can happen. There's the recognition of the legal issues, you all know about them, but I found very interesting a set of guidelines or guiding principles that the observatory called them for policymakers, just in the way of harmonization. The first one is the craft of simple definitions of the technology. This is easier said than done, but I think it's a very good basis if it can be achieved. Then they recommend also to communicate legal interpretations as broadly as possible to the public, not only players, but also the public at large. They recommend also to choose the right regulatory approach for each problem, which again, it's easier said than done. Then to harmonize law and to harmonize the interpretation of it, which is something that Amandine previously was referring to. This is one of the difficulties that we as lawyers and counsels of different companies, startups, and middle market technology companies face every day. We have to interpret the law for them. We have to convince them. Many times it's complicated to convince them how can this be so different in Spain or Germany, France, other European countries, if we have harmonized laws, regulations. Another interesting guiding principle was why not making also use of blockchain as a regulatory tool. So this is an open point that they left like this. Then the rest of the guidelines relate to help policymakers develop an understanding of technology, which is not obvious many times. To work on high impact use cases first, and leave the rest of less mature cases closely monitor, of course, there, but encourage with these ones self-regulation and concentrate and focus on high impact cases. I think these guidelines by the European Observatory and Forum are interesting if we look at harmonization. As I said, they are easier stated than taken to the practice, but I found interesting to explain a little bit about this conclusions book that I recommend you all to read.
Thank you, Belén. Appreciate that.
Thank you.
Nina, what is your reaction then to what both Amandine and Belén have been saying? What do you think? And also, of course, after what Josh said.
Yes, I believe Europe is on the right way in the sense that it now starts to harmonize. Clearly, there is this leaked paper for the future European crypto regulation, which will be published, to my knowledge, formally on Wednesday. But I guess we all had a sneak preview already. And they try to prevent national jurisdictions from keep holding on to their national versions. So they really try to bring everyone on track. And what I liked is, what I saw for the first time is that they create specifically for significant issuers of crypto instruments, they create what they call college of regulators. So the significant ones will be under the regulation of the EBA, the European Banking Authority, plus the national supervisory bodies, and also including the important service providers surrounding an issuance. So also exchanges, wallet providers, which work together with this significant issuers. So all of these regulators of all of these entities will get together in what they call a college. So I think that's a good approach to ensure alignment in the construction of these laws coming up. I think that is a very nice thing. And then what I would like to mention, you said I had been invited to join the Unidroit exploratory working group on digital asset. I think that's another very important and this time global initiative, with the aim to come up with a taxonomy of digital assets and recommendations for legislators worldwide to become a bit more harmonized, right? Because actually what you said, extraterritorial reach, is not helping at all, because that simply means that all the jurisdictions claiming extraterritorial reach will apply additionally, right? So we already have the issue right now that when you handle with tokens, there is never ever only one single jurisdiction which is applicable. That's already today the case, that you have multiple jurisdictions. And you know, the more the jurisdictions claim to have extraterritorial reach, the higher number this will become.
Wow, that's a really good point, Nina. I mean, it ends up being kind of a zero-sum game and not one in which I guess anyone could win. But Josh, how do you react to that? Nina makes a lot of sense to me. I'd vote for her.
I mean, I think she makes a lot of sense too, not just on this presentation, but just in general. I do think things like having a common taxonomy would be incredibly helpful, because no matter where you're starting from your position within a particular country or jurisdiction, at least being able to literally speak the same language about the thing you're talking about would be incredibly helpful. I personally, as a personal matter, would love to see some kind of harmonization. What I do have to couch that with, or caveat with, is that within the US, we don't even have some sort of real single approach, right? We have many different regulators, all of whom take potentially jurisdiction of some of these transactions involving digital assets, right? The SEC may say it's security, CFTC may say it's commodity, IRS may say it's property, FinCEN may say it's money or some money substitute, right? And then the 50 states have all different sorts of rules as well. I mean, I do think we're seeing a motion in that direction. For example, just recently in the past couple of weeks, bank regulators in 49 US states, DC and Puerto Rico, basically appear to have developed some sort of plan to make compliance for cryptocurrency companies easier by consolidating certain exams. This relates to money services businesses, right? But that's just streamlining things across these states, right? Whereas right now, if you're trying to go into the US, you have to navigate all of these different frameworks. So while yes, I do believe that it would be great to have some sort of overarching framework, one of the key differences that I see is that, you know, when dealing with clients who may be outside of the US and considering whether to enter the US or just to stay out altogether, you know, when you actually look at the way different regulators around the world, when many of them can look at a token, right, and say, what are the characteristics or rights related to this token? Whereas in the US, very often you're looking at what is the transaction that this is happening in, which is looking at a very different thing. How are you selling it? How are you offering it rather than what it is? So all that to say, I agree about a common taxonomy, and we'll all, I think, continue trying to reach some kind of common view.
Excellent answer, Josh. Very diplomatic. I like that. So we're going to quickly do a lightning round to each panelist on DeFis. We're getting a lot of questions coming in, a lot of them, of course, on international regulations, clearly of interest to all the folks who want to do business all over the world. But before that, I'd love to get the panelists' thoughts quickly on DeFi, starting with Amandine. Amandine, what do you think?
Yeah, so DeFi has gained a lot of traction lately. We can also say that it's exploding. It makes me think a little bit of what's happened in ICOs back in the days, as if it was a long time ago. It was only a year ago or 2 years ago, but in the crypto world, it seems like ages. So I think if we talk about regulation, because I will, of course, not enter into the details of the project, of the DeFi project, but if we talk about regulation, I think it's going to raise an interesting debate. There is one thing that regulators hate, is that you seem to have no one responsible. So, I mean, code is law, you know, and somebody drafted a code and then everybody can land, you know, on a protocol and get interest through a smart contract. Just like, but who did it? You know, who's going to be responsible if my claim tomorrow is not going to give back, you know, the cryptos that I landed? So what we can see is that the proposal that has been released and that Nina talked about earlier at EU level has left DeFi aside. Some of the provisions will have an impact, but it has left DeFi aside. And I think this might be a smart move. I believe that too much regulation is going to kill regulation at some point, and that we should have, once again, a risk-based approach. If DeFi is big now, it doesn't mean that it's big, you know, per se. So I would recommend that for the time being, we just have a look at what's happening. We just see the blind spot, we just see the risks. And then once we have that in mind, we do something about it. Look at the ICOs. The ICOs, I mean, France, for example, rushed into a regulation, spent a lot of time on the regulation. ICOs are not dead, but we can see that the number has drastically reduced. So let's see what DeFi means, you know, really, and what it entails. DeFi means a lot of things. Some of the DeFi projects are not that DeFi's, you know. It's also, if with DeFi you're not responsible, then everybody's going to do DeFi projects. So I think we should have a look. It's urgent to wait. That would be my conclusion.
Oh, thank you, Amandine. That's very interesting. Belén, your quick thoughts on DeFi. What do you think? Urgent to wait?
Yes, I also agree in this aspect. But I also mentioned before, while we were preparing this session today, that I wanted to convey very good news. I'm very happy, and I think we all should be very happy here in Spain, because we have waited very long to have our sandbox law, and we finally have it. It was, as I was mentioning, we have it since last week, and this is it's not yet a law, but a bill of law that was just passed by Congress. I must say that this was a very long-awaited law by lots of us, because it started back in 2018 when it was passed by the government, and because of different political circumstances, it was stopped, including because of the pandemic, of course. And it was just published as a bill of law and passed by the Congress last week. It will go to the Senate. We don't expect a lot of modification to the law. I must say it follows, as far as I can say, a bit the English model, and a few notes because the bill is quite long. It states, of course, that it seeks to foster the digital transformation of the Spanish economy. It seeks benefit the consumer and lower the entry barriers of access to finance. Of course, this is also acknowledged that it's driven by changes in demand. And so we have finally the control testing phase for decentralized finance and other in Spain. It establishes a legal regime, as I said, similar to the one I know in UK. Is a regime including the access and participation conditions of the players. It establishes, following also Amandine's comments earlier, that it makes it very clear that liability relies on the company that it's doing the pilot. So whenever you have consortiums, etc., the liability relies on the player doing the test. You need to, as a player, as an actor, to ensure your activity. You need to guarantee that what you are testing will respond in terms, also in financial terms, to your users or the consumers. It provides a system of exam of the results. It needs a memo to be drafted by the player, and of course the results will be evaluated by a commission. It will be then sent to the supervisory authority. It makes very clear that the pilot program does not encompass a direct authorization for the activity. Additional tests can be required by the supervisor. The authority will draft their conclusions, and the operator can apply or not for authorization after the pilot to commence the activity. There's one positive aspect as well, which is that the authority can decide whether it starts an expedited authorization process if the activity needs authorization, so that the player can start the activity immediately.
Thank you, Belén. Sorry, I hate to interrupt, but we are running out of time and we still have to get to questions, and I need Nina and Josh to give their comments on DeFi, but thank you so much.
Excellent.
Nina?
Yeah, maybe just briefly. I'm very jealous, Belén. I would have loved to have, you know, any type of sandbox regulation here in Germany, but we're far away from that. So yeah, DeFi. I think Amandine actually addressed the main point, which is the question whether there is a subject for regulation. And if we are very honest and frank, we must, I guess, all admit that only in very few exceptional cases there is actually a true decentralization on all levels, right? So typically what you see is at least centralized service providers granting access to those applications, because the normal user out in the street is not capable of using those things directly, right? They need an access provider. And so you could at least capture those via regulation. And in Germany, I can clearly say they are already captured, right? And then there is a certain risk if regulators don't find a subject, because then they could come up with the idea, and you see first hints towards that also in the new EU-wide regulation, that they make, like, for example, coding a licensable profession as a whole, right? So I think that's the biggest threat here. And I spotted in the MiCAR, the markets in crypto assets regulation, already that also already advice with regard to crypto is regulated. So I wonder if I, as a lawyer, actually need another license in the future, in addition to what I already have.
Oh my goodness, Nina, that sounds awful. I mean, it sounds awfully complicated. Wow. Josh, what do you think?
So, and we were joking about this, as you know, before this panel. I mean, I think the thing that comes to mind for me is, okay, this new wild thing that we're calling DeFi, bumping right up against these old things that we call laws. And I think, you know, whoever mentioned earlier about feeling somewhat reminiscent of a few years ago with ICOs, I think that's exactly right. and certainly not speaking on behalf of other jurisdictions, or really even speaking on behalf of my own, but my impression is just that, you know, we need to look through this label, right, and look at what's being done. And particularly if you are in a jurisdiction that's looking at the transactions, or for where, you know, the form is disregarded for the substance, or should be, I think we need to not lose sight of it just because people are getting excited about the term DeFi, and because there is so much, frankly, money there right now. Another thing I'll just mention, I mean, and certainly I'm a fan of this entire space, DeFi included, right? That's, you know, I have a great love for this space. But at the same time, I think we do need to think, or I would like to think that we should think about this, is that, you know, we're in, and I've said this in a couple of different contexts, but we're really in kind of an intellectual bubble here, right? We all can like envision how this is working, at least somewhat, and what the laws are, and, you know, what the stopgaps are. But when you think about people across the world who may be accessing finance, right? And they're like, be your own bank. Well, there are some reasons why regulators are tasked with protecting people, right? They're protecting people who may not be able to, you know, accurately ascertain the risks or withstand the losses. And so I think it's just, as we think about ways that people may be somehow affected by, people being companies or projects being affected by legislation, and whether that's a good thing or a bad thing, we should also think about, you know, the universe of users, and whether they should somehow be protected.
Well, that's a great point, Josh. And actually that leads me then to our first question, which is actually a combination of a few questions on international law. One question was asking, could we have an international law done by treaty? There are, of course, treaties that govern things like trade and other aspects of international interactions. And then someone else asked, well, if we can't do it by treaty, what about an international organization like ISO? Could they do it? So panelists, quickly, who wants to leap on this? Treaty, ISO, what? Nina, okay.
I can say something because I was in the beginning part of the ISO TC 307 group, which is on blockchain and distributed ledger technologies. I think they try to build their own taxonomy, and they try to get their heads around smart contracts, about interoperability and stuff like that, but not so much on the legal side. Governance touches it maybe a bit. There's a group on governance in ISO. TC 307. I actually looked once deeper into the question whether we could maybe apply the UN Convention on Sales of Goods of International Trade. That doesn't apply because it only applies to physical goods, but I would love to see maybe as a result in a few years' time out of this exploratory working group at Dvorah, maybe a United Nations Convention on the sale of tokens. You never know, but that could be like a long-term goal. When I looked into that 2 years ago, it was too early, right? I talked to a couple of participants and they all said, well, no chance. And it's no quick thing.
So Amandine is someone who belongs to a company, who has to do this for a company. What are you thinking? Are you waiting for those international law, international treaties, or are you just going to go forward?
Oh, we're going to go forward.
Okay.
No, I mean, for sure. There's no way we can stop business just because something is not in place yet. You know, it's not possible. That's not the way people building the business actually think. And I think that's the main difference between being a lawyer in private practice and being part of the company, is that sometimes you're just like, I don't want to put barriers, you know, in the business. I mean, this company is a great company. It makes employees, you know, it sells things which I believe are crucial for the crypto industry to foster, like keep your keys secure. If you want to be your own bank, well, the bank needs to be robust. So I truly believe that we are achieving something great at Ledger, is participating to the whole security of this. This being said, you know, sometimes it's true that I wish I could say, well, the law is this, you know, we just have to do this. And I kind of say this because I'm just like, well, there's no law, so I'm not sure, you know, whether we can do it or not. And I think it puts the legal people within this kind of company in an embarrassing situation. But because we are becoming more and more business oriented, we have a kind of very clever discussion with the management and the business people, and we can move forward. I think not everything should be regulated. We should regulate what is posing a risk, and if there is interest to secure. Once this is done, people are grown-ups, and there is an amount of risk when you enter the crypto space. There is definitely an amount of risk, it's people think they're going to become rich, in like 1 second. So we do a lot of educational work for sure on our website, but there is an amount of risk, and I think we have to live with it. The crypto world cannot have less risk than the financial world. There is a FinCEN report that was released today where banks are struggling with money laundering. They are still struggling with money laundering, and we are trying to impose rules like the travel rule, for example, on the crypto companies, but this has not shown that it would kill money laundering. So I think we shouldn't be so risk adverse with the cryptos. We have to bear an amount of risk.
Now, that's a very interesting point, and that actually brings me to a question I'd like to ask Josh and Belén here. Someone was saying, do we run the risk of legal overfitting? And I think what the person meant is that there is so much, the technology is moving so quickly, the law is trying to keep up. We are trying to have a balance of risk, but as Amandine points out, there is some risk involved in the world. And if we don't take some risk, we also won't get the benefits. So how can the law balance technology running forward, the law hanging back internationally? How do you two see it on an international basis? How can we solve this problem?
Yeah, I mean, I think not only technology, but also economy and society. The law is always behind and trying to catching up, of course. So when you have this kind of exponential technologies, it becomes more and more complicated. We were very happy. I was very happy about telling you that we have finally the sandbox law in Spain. We also announced earlier in the speech that we have this proposal for EU regulation on crypto assets. Okay, we have some literature to read, but until the EU proposal of regulation will be applicable law, it will still take, you may correct me, colleagues, but it may still take 2 years. At the very least. I also saw a question by the audience on whether it was directed to me on whether I thought if I thought that the Spanish regulator, the CNMV, would change their mind shortly. I think that surely there would be movement because we have the proposal of the EU regulation, but when this will be applicable, it will be later and not as fast as society at large needs it, and definitely not, according to what Amandine said, what players are demanding. This is my view.
So this is a great point, Belén. What you're basically saying is technology is always going to race ahead of the law. It sounds like the EU, though, on law, and Spain, some other countries are racing ahead of the US. So now I'll toss this to Josh. Is it going to be that technology and the EU law, it's all going to catch up here and be all good, and the US will be where?
So, I mean, well, okay, before I get into exactly that, I just want to say, I agree with what was said before about trying to reduce the risk to zero is not a good approach because we don't have that in other industries, or, that's kind of like the opposite of technology innovation. But what I would say is, I think, as we talk about how this might work, it's funny because with the US, and I'm not being a defender of US laws, okay, just a messenger, right? But people are very critical because they say there's no clarity. But actually the counterpoint to that is, well, it's principles based, it's facts and circumstances, and so you don't have to change it all the time. We've got the Howey test, for example, in the securities context, which is over 70 years old. And why can it keep applying? Because it's applying to the transaction. So I think there is a tension between clarity and being able to not have to refit laws every time. And so maybe a way, I'll just throw it out there, maybe a principles-based approach, right, that some jurisdictions have adopted could be good. That being said, I think depending on how the jurisdiction works, if case law ultimately interprets those principles or if, you know, however this is going to be, you may run into the same sorts of challenges about a lack of clarity. You can get clarity if you legislate clarity, but you might not want that because then you're stuck at a particular period of time, possibly. So.
Well, I'm going to drop the one over quickly to Nina and then to Amandine. Lack of clarity, which is better? You want speed?
Well, I think it's very easy. You know, that's, I think, the main difference between code and law, and that's why code can never be all of the law. Law is gray, right? There's a little piece of black here and a little piece of white there, and then there is a huge gray space, right, in which we basically operate. And I completely agree with Josh, that needs to be that case in order to have law adopt to new developments and innovation, right? So it's the same with reducing the risk to zero. That will neither happen nor will we ever be able to make the law 100% clear.
Okay, that's a very good point. Amandine, gray space, good, bad?
Well, I think I can only agree with what Nina and Josh said. You know, I think companies should be responsible for putting in place the measures adapted to the risk they generate. That's the exact AML approach. If you generate risk, you need to put a process which would reduce the risk. And I think companies would be way more responsible and way more compliant if they would be a little bit in charge of the principles they have to put in place and to follow up to the risk that they are generating. So I'm in favor of the gray.
Okay, but the gray, however, putting responsibility on the company, it sounds like, not just on the regulator.
Yes, no, not only on the regulator. I think, you know, it should be principle based, as Josh said, you know, like you do this, you should think about this, now put the principle in place, you know, put the procedure in place that would address the risk. And then you have to show that you did a fair balance.
Now, Belén, it sounds a bit like that's what's happening in Spain. Do you agree or disagree?
It should. It is not every time that the balance is put in place. With some other areas of law, we didn't touch upon. It was not the topic of today. But for instance, privacy law, GDPR. I saw some questions from the audience. And excuse me, Victoria and Daniel, for it will take just 30 seconds. It's principle based. Of course, there's a lot of things to do in order to be GDPR privacy law compliant. But as a player, you have to you need to show and demonstrate compliance, and you can do it in many different ways. But you have to show that you did something, that you thought about the problem, that you addressed the risk, that you try to minimize the risks, etc. So I think that to many other areas of laws and to other economic activities, this should be also the principle to follow.
Excellent point. Well, I think then we're having Victoria and Daniel on to wish us well for the panel. I would like to thank our awesome and amazing panelists and to all of you for sticking with us throughout the end of the panel. Amandine, Belén, Nina, and Josh, please reach out to them, Umbrella, contact them. They are totally amazing, and I'm sure they would love to talk to you, and definitely, whatever they have to say, worthwhile listening to. Thank you all so much.